Hello, happy hump day, everybody. It is Wednesday, August 20th. Hard to believe we are almost at the tail end of summer. What the hell happened? Where did it go? Man, I feel like it's been a super busy summer, but it's just like flown by. My goodness. How's everybody doing though? How's everybody doing from all over all parts of the world? I know we have people all over the US. I was actually looking at some of my channel metrics. Got a lot of international subscribers, which is pretty freaking cool. I love that in this day and age, you can have viewers from all over the world, and crypto is really a global phenomenon. I know a lot of times we really focus on what's happening in the US. I mean, it is the biggest market, but man, this is happening everywhere, everywhere. I mean, we do talk about the countries, the sovereign wealth funds, we talk about the regulation in other countries as well. But guys, we are in some very exciting times. That's it. What's up, Ken? What's up? Candle. Got my candles back there. Guys, I'm going to start off the show with a personal story here. I got some really good news today, but I want to remind everyone, make sure that you're getting your regular doctor checkups, okay? Even if you think you're super healthy. So earlier this year, I got my annual checkup. This is probably back in April or May, so not that long ago, and got my blood work done. And I live a very healthy lifestyle. And I came to find out, and my doctor called me, that my GFR, which is your filtration rate on your kidney health, was very degraded to the point where I had like chronic kidney, like my numbers were in line with like chronic kidney disease, pretty bad actually. And I was pretty shocked because, I'm like, man, I drink a lot of water. I eat healthy. I get in the gym 5+ days a week. Don't drink that much, like not nearly as much as I used to when I was a little younger, and we tried to figure out what was going on. And I had been using Zens, the nicotine pouches, for about a year. Started off, I'd be on the golf course with buddies out drinking, whatever, and they would have them. So I'd pop one. And then I was like, well, I don't want to be a mooch. So I started buying some, and not the strong ones, the 3 milligram ones. But we started kind of trying to dissect everything. We found that, nicotine in particular, they're finding out now with some of the synthetic nicotine that's used in some of these pouches, that it can cause hypertension. And they're starting to link it to kidney issues. So I went cold turkey on that. And I'm happy to say that I got a call from my doctor this morning, and we've been monitoring my blood work pretty closely for the last few months, but everything is back in fully normal, healthy range again. So that is really freaking good news. And it turns out, I think those Zens were causing hypertension and restricting blood flow to my kidneys. So pretty scary shit, man. So again, make sure you're getting checkups, because I live a really healthy life. But man, if I hadn't gotten checked out, who knows? That could have run longer and could have turned into like a long-term issue with irreparable damage or something. So, woo, man, not great. How should I take my nicotine now? I don't know, man. I am not doing any more nicotine. I'm done with that. I'll take some edibles sometimes. Take some edibles sometimes. Helps me sleep sometimes, man. If I'm trying to go to bed early, man, it's knock me out. All right. With that said, guys, pay attention to your health. Yeah, that's the main takeaway there. Just get your regular checkups, guys. You never know, and the earlier you can catch that shit, the better. So obviously, very good news there. It's some not so good news. Well, it's a little overblown. We're to get into some of the news going on around the world today. You might have seen this article flying around, or people talking about how Walmart's recalling some of their frozen shrimp because of radioactive contamination. Said it shouldn't be consumed. It's like, huh? Says that the consumers who bought the shrimp shouldn't eat it. Yeah, no kidding. I should throw it out. Customers can contact the store where they purchased for a full refund. Well, that's quite nice of them, isn't it? Says that it was the shrimp could be contaminated. It says with a radioactive isotope called cesium-137. says that none of the products have yet tested positive for it. The agency said it issued the warning for Walmart's Great Value shrimp after it detected it in a single shipment of the frozen shrimp. In particular, says that shipment did not actually enter the U.S. They do call out some of the shipments here that you might want to throw out, and it goes on to talk about what it is. It says that it's produced by nuclear fission and used in medical devices, also a byproduct of nuclear fission and nuclear reactors. So how the hell did that get in that single shipment? I do not know. Says that it was still the amount that was detected is well below levels of concerns, but it wouldn't pose an acute hazard, but nonetheless, one that you should avoid. So if you did buy those specific shrimp, throw that shit out and get your refund. Pretty crazy stuff there. He said edibles take 12 hours to kick in. What kind of edibles are you taking, man? Tell you what, man. Yeah, edibles are they're legal here in Illinois. I don't mess with it much, but every once in a while, if I'm like trying to go to bed early, like 8 p.m., like I'll knock out from that. But yeah, man, I don't get too crazy these days. That's a crazier times in my younger years. Oh man. All right, let's talk about this. We had this big report come out. Elon Musk. There's a report that came out from Wall Street Journal that he is no longer going to launch his third party. This came out, I remember back in July when him and Trump got into it. Things got a little weird, actually really weird. And he's like, I'm going to start a third party, America's party. And everyone's like, all right, bro, like your polling is actually like really bad. Like just focus on your businesses, Well, this is the report that came out yesterday from Wall Street Journal. Said that citing people with knowledge of his plans, said that he is quietly pumping the brakes on that third party. Musk responded and said that nothing that the journal says should ever be thought of as true. All right. Well, why it matters, though, of course, is that they have it could take votes away from the Republican Party. So the midterms are coming up November 3rd of 2026, a little over a year. But the big concern from the Republicans is that, if Elon did try to run this third party, it would take a lot of votes away from the Republican Party. And obviously, the midterms are a big deal. And that's what a lot of people have their eyes on right now, because it's going to determine who has power over the Senate and the House. And that could really change their trajectory and the power that Trump has in the rest of his presidency. It also, the report went on to say that not only had he slowed his plans of a new party, but was also considering backing J.D. Vance in 2028 for a presidential run. I would not be surprised if that does come to fruition at all, actually. And I would bet there are people in his inner circle that might have leaked this. That seems like it's a very likely outcome. Elon did come on and say, like, we're going to wait to see what happens as we come up on midterms as to what I'm going to do with this third party. He just needs to get out of politics, in my opinion, man. Like, he got involved, it like screwed up his companies. I don't know, you can say what you want about his reasoning for getting into politics, but I would say it was a failed experiment. Like, it did not go well for him. Speaking of the candidates, though, for Republicans and Democrats, I know we're a long way out here, but it is coming up in the news, so it's worth covering. Right now, on the Republican side, you have J.D. Vance, the clearly ahead of everyone else, 53%. Marco Rubio's down there. Even have Trump down there to run his third term. Oh, man, that's funny. And then on the Democratic side, Gavin Newsom is leading the way. You have AOC behind that, Pete Buttigieg. Gavin Newsom right now is the heavy favorite, up 7% recently here. That's pretty wild. And if you look at what we're looking at as far as the overall winner here, as of right now, J.D. Vance is in the lead at 28%. Gavin Newsom at 18%, AOC at 9%, and so on and so forth. Obviously, we are a long way away, guys. We still got 3.5 years. I know it's some people that's music to their ears. Others, they're like, they want to go run and hide and scream. 3.5 years, though. A lot can change between now and then, guys. A lot can change, but fun nonetheless to talk about where things stand today. Newsom ruined my state. Dude, California. Actually, I might have an article about California in here. I can't remember. Basically, let me see. It was Bed Bath & Beyond basically said they are not going to open up any stores in California. They will only do online orders and ship to California just because it's set up. Like companies that try to open in California, it's set up like horribly right now for them between taxes and a lot of the red tape and everything. I don't remember if I actually pulled that up to cover it today or not. I was looking at it earlier, but yeah, man, I know a lot of people that live in California. I love California. I mean, I love like San Diego. LA is a little too pretentious for me. Hopefully I don't ruffle any feathers with that statement, but I personally wouldn't want to live in California. I mean, the taxes are crazy. The cost of living is like ridiculous. The weather's great, but I wouldn't want to open a business there. That's for sure either. Oh, with that said, let's talk about some macro stuff. Enough with the politics. Enough with the politics. But, it's worth covering again because it does have implications on how much power the White House has, which has implications on what happens with the economy, which has implications on the crypto industry and implications on DePIN. It's all interconnected. Actually, we're going to talk about that. Tom Lee made a statement about how that's interconnected with Jerome Powell. We're going to talk about that in a minute here. We talked about this. This has been all over the news today, but this is something we covered a month ago. But still, it is a big warning sign. Corporate bankruptcies are on the rise, the highest we've seen since 2010, following the Great Recession. So that's obviously not a good trend that we're seeing there. Goldman Sachs came out with an interesting report regarding the tariffs and inflation. And it's something that we've been talking about a lot, in particular the PPI. Remember last week? I think that was just last week. My days are running together. I think, PPI. So the producers price index, and that has to go. It has to deal with what these producers across the U.S. are paying for their materials and whether or not that'll get passed on to CPI. So Goldman Sachs came out with this report. It says infuriated Trump, saying average Americans will bear 2/3 of the cost. But if we dig into the details here, says that so far the businesses have shouldered most of the financial pain from the tariffs. But Goldman Sachs is saying that they're going to start passing it on to Americans. I'm not really sure how they can be so certain about this, but this is what we've been talking about, and why the CPI hasn't risen that much is because, well, you have some of the international companies that are eating some of the cost to ship into the U.S., but a lot of the businesses within the U.S. have been eating these costs so far. Said that as of June, consumers had absorbed only 22% of the total tariff cost. This is in line with what we saw the first time that Trump put tariffs on China. In fact, I think consumers absorb even less. But it's saying that the numbers are expected to leap to 67% by October. That's what Goldman Sachs is saying. And that businesses today are absorbing about 60 in the U.S. are absorbing about 2/3 of the cost of these tariffs, but they're expecting that to drop significantly, and that they're going to pass that on to consumers now. So to me, like the big question is, can they even do that? Because consumer sentiment is falling off a cliff. People are in credit card debt. People are having to pay on their student loans now. I don't know these businesses can pass the cost on. So this is what we have to wait and see how this plays out. I talked about this last week, but obviously real estate coming down is going to help with the CPI. But man, we're going to have to keep a close eye on this as we approach September, October, and later into the year. Of course, the overall overwhelming consensus right now is that we will see rate cuts. That Jerome Powell. We're getting the Fed minutes. They should be released like right now, by the way. So I'll be checking those out later. And then Friday's a big statement in Jackson Hole. But I think the job markets and the revisions we're about to continue seeing are going to push Jerome Powell to cut rates. But now the CPI, I mean, this is going to be really important. Do the businesses pass on these costs to consumers or not? And can they? Goldman Sachs thinks they will. To this point, they haven't. This has been coming up a lot, the reverse repo. A lot of people are talking about this. So banks lend to each other overnight, and they basically have this a rate that they charge to lend to each other. Back really in 2021, after we pushed a bunch of liquidity into markets, the Fed kind of intervened. Essentially, instead of the banks lending to each other, like, hey, give us your cash. And this is a way for them to kind of implement quantitative tightening, take liquidity out of the system. And the Fed was taking cash from the banks and essentially issuing them these kind of bonds, if you will. Okay. These agreements. What they've been doing, though, quietly, because, they're not quantitative easing guys. Since really 2023, they've started to push that liquidity back into the market. So they're doing this pseudo kind of under the radar quantitative easing. And now they're kind of coming to the end of this, where they don't have any cash left to continue juicing the markets with. And this has been really important to keep liquidity in the markets, because while the Fed can say, hey, we're not quantitative easing, it's like, well, you kind of are in a sense. I mean, you're pushing this liquidity back out there. So this is what everyone's talking about. They're like, what's going to happen now? That's what this guy's saying. Like, hey, this is the lowest we've seen in 1,596 days. What happens tomorrow? Once we can no longer use this like lever, this mechanism that's not quantitative easing, but kind of quantitative easing, right? So it is a valid question. And I thought this is interesting. I looked at them all time. This is really only something they started utilizing after they printed all that money after COVID. So this is kind of a new phenomenon that we have not experienced in the past. But it's just an extra lever that the Fed can use to pull liquidity out of markets, push it back into markets. That's not necessarily on people's radar. And if you want to learn more about that, check this guy out. So I watched earlier this year. I mean, you put this video out like 9 months ago, but earlier this year, I wanted to learn more about the reverse repo markets because, I'd seen some mention of it and I knew that the Fed was doing this, but I watched this video. He does a really good job breaking it down. This guy is freaking really smart. I highly recommend if you're interested in macro stuff and the economy in that sense, he's a really good resource to learn. He definitely breaks things down in a way that's easy to follow. So that is what the reverse repo markets are, and that's why everyone's talking about it right now, because we are kind of hitting this critical point. But speaking about the Fed, and this is what I was talking about with Tom Lee and how it's all interconnected, guys. And by the way, our boy, Funk Chan, he reposted the stream. Please repost if you're on X. Make sure to subscribe to me on YouTube if you don't already. Yesterday, I went through the GeoNet GIPs, by the way. I'm going to post those as a separate video on my channel. So if you're into GeoNet, check that out. I'll get that posted probably later today. But Tom Lee said that Fed Powell's speech on Friday in Jackson Hole is going to be really important. We've been talking about this for a couple of weeks. Yesterday, I talked about the expectation that we might not hear what we want to hear, but Friday is going to be important to see what Jerome Powell says. Same with the minutes. And of course, those are the notes from the meeting, the FOMC meeting a few weeks back. Those should have been released about 40 minutes ago. So I'm sure you'll start to see, I'm not on X right now, but I'm sure you'll start to see people post about that and what was said in that meeting. But obviously, Tom Lee is involved with BitMine, the largest Ethereum treasury. And the stable coins have sparked a huge rally for Ethereum. And it's not just the US, guys. We talked about this. There's some rumors that China was eyeing stable coins after obviously they've been pushing their CBDC. But it seems that China now is exploring a yuan-backed stablecoin to challenge US dollar denominated current or stablecoins rather, like USDT, of course, Tether, USDC, aiming to internationalize the yuan. Hey, we've been talking about this, guys. Like the US, there's really a couple main reasons they wanted to pass the Genius Act. Number one was that it solidifies the US dollar on the global scale. I mean, you're seeing USDC and USDT being used for international transactions. Of course, that's tied to the U.S. dollar. Obviously, the other reason is that they're going to have to buy, this issuers going to buy a lot of treasuries and buy up our debt. That's great. But China now is saying that this initiative aims to challenge the dominance of U.S. dollar-linked stablecoins, which currently accounts for 99% of global stablecoin supply, and are increasingly used as cross-border trade and crypto transactions. And it says the move is a broader roadmap to internationalize the yuan, with plans expected to be reviewed by China's State Council later this month. I thought this part was funny. This potential development represents a significant departure from China's 2021 ban on cryptocurrency. Guys, we hear about that like 20 times a year. On trading and mining, China's banned crypto like 5 million freaking times. And I love it when like the reports emerge again. They're like, oh my God, like the sky is falling, China banned crypto. It's like, nah, not really. Not really. Guys, don't fall for that. If you've been here long enough, you know not to fall for that FUD. But here they are. And I think this is important because the U.S. has been a leader. We talked about how like the rest of the world tends to follow, and we're seeing it with China right now. We saw it with South Korea, right? A lot of these countries were going towards CBDCs, and we're seeing this major shift. And I think the U.S. is the reason why. And it is really funny because I have friends that they are like, oh, crypto's a scam. Like I don't even talk to them about it anymore. And it's funny because I think that crypto is going to save the U.S. dollar, at least extend its dominance. I don't know about forever, but it's just it is funny to me. It is funny to me because it's good. They're going to be buying up our debt. They're establishing the dominance on the global scale and the future rails of finance. And obviously, China sees it. We're also seeing a lot of these types of reports. USDT just minted another $1 billion. We saw this, pulled up a few of these on USDC yesterday. So generally speaking, this is people that are printing up, issuing, stable coins to invest in the crypto markets. Where is that money flowing to? That's the question. Well, we are seeing some rebound to an extent with Bitcoin right now. Back to 113,595. This dropped all the way down to the below 113,000 earlier today. People are like losing their minds. There's some people calling for us to drop below 100,000 as we move into September. I'm not saying it can't happen. Look at this. What's your take on stablecoins could be a backdoor type of CBDC in the future, like a wolf in sheep's clothing? Yeah, I agree. CB. Yeah, so that's the big question, right? I mean, we've seen with I think it was Tether recently where there were some stolen funds. They were able to freeze those assets. That doesn't sound very decentralized to me. And obviously, all these issuers are going to be in cahoots with the government. So, like, is it a wolf in sheep's clothing? I think there's some validity to that. I still think it's better than just a straight up CBDC on a private blockchain run by the government. But I think that the way the stablecoin bill has been passed, I think there are some positives from it for sure. It's going to bring a lot of liquidity on chain. I think it could bring money into crypto assets, but I also think we need to be a little bit weary. I believe that it was structured in a way to save our banking industry because let's be real, like if anyone and their mother could issue stable coins and you could park your assets there and get a yield, our banks would be screwed. Our banks are already kind of screwed. They're sitting on massive unrealized losses. Like if everyone went to the bank right now, they would not have our money, obviously. But a lot of our banks are sitting on huge losses to the tunes of hundreds of billions of dollars on commercial real estate assets, on treasuries that are underwater. So, I think the government realized, hey, we can't have these stable coins be competition to our banking system or it's all going to collapse. So how can we structure this bill in a way that saves the banking system, but also, embraces this future technology? So I think it's a hybrid between what everyone was hoping for and a straight up CBDC, but I think we need to be conscious of that too. there are probably some things, some hidden agendas in there. But you take the good with the bad, I suppose. The big thing with Bitcoin, though, I'm paying attention to, though, is this Bitcoin dominance, guys. Getting back into it. We're at 59.43%. We haven't been this low in. This is back in January. Wow. Of course, this is a percentage of Bitcoin against the entire crypto market cap. This is a good sign for alts. This means that we're seeing the flow of money from Bitcoin into assets like Ethereum, like Solana. I'm not going to stop beating the Solana drum, by the way. I'm going to show you even more today, like why I'm bullish and why I feel so confident that it's going to be the next rotation. We're already starting to see it. But Bitcoin dominance dropping is certainly a good sign. That's what we really need to see for alt season to happen. But what else do we need for alt season to happen? This is something I've been talking about a lot. I personally think, and not to say we can't have people buying up leading up to this event, but the market structure bill is going to be incredibly, incredibly important. And I want to play this clip from Cynthia Lummis that kind of talks about this a little bit on the timing, at least, that we can expect. It is pretty much in line with what I've been reporting on, but nonetheless, I think it's a good video to play. Oh, is that not playing the audio? Damn, hold on. To reshare. Sometimes StreamYard loses the audio. I don't know why it does that, but it should be back now, guys. Let's talk about the market structure bill.
On September 3rd, we are working market structure with the goal of having it out of the Senate Banking Committee by the end of September. And then the Ag Committee, the Senate Ag Committee, hopefully will work their part of it, the Commodity Futures Trading Commission part of market structure, through the month of October. And we will have market structure to the president's desk before the end of the year. I hope it's before Thanksgiving.
Okay. So one of the things she mentioned, I talked about this before, but there's going to be a discussion and draft towards the end of September, rather. So the SEC and the CFTC, so the obviously oversee. You have commodities and securities, right? So the whole thing is it's going to determine with this bill what falls under the CFTC and what falls under the SEC. So they're going to have this all figured out by September 30th, and then it has to go to, I believe, the Senate floor, and then it has to be voted on, and then it has to go to the president. So Cynthia Lummis said, hey, this is going to be going on into October. We hope to have it on the president's desk before Thanksgiving. So definitely by the end of the year. I think the alignment here is really important because all of these spot ETF applications have been basically pushed back to mid-October. And I, for one, think we need both this bill to be passed and the spot ETFs to pass for us to really see the inflow and the alt season we're hoping for. Not to say we can't see like a mini surge before that or buying leading up to that potentially. But I do think that both are going to be important. So this is something to keep a very, very close eye on, and we'll continue monitoring what's the timeline look like on this market structure bill, also known as the Clarity Act. That said, guys, Solana, let's keep beating that drum, because if you guys saw, there we go. The bullish IPO, they raised all their funds through stablecoins. First IPO to do so. That's freaking cool. 1.15 billion. Guess what chain they chose? Solana. Remember yesterday we talked about how, you know what? I need to stop sharing here. Stop sharing this. My sharing system is all messed up. Don't worry. We'll get it back, guys. Here we go. Remember I mentioned yesterday that Wyoming was issuing a stablecoin. They're the first state to do so. What chain did they choose? Solana. Solana. Are you see what I'm saying, guys? You see what I'm saying? Look at these trends. It's been Ethereum, but all of a sudden, we're seeing Solana get a lot of traction. This bit mining company is rebranding to Solai on the New York Stock Exchange. So they're changing their ticker. They're transitioning from a Bitcoin mining company to a 300 million plus Solana treasury company with a Solana validator. Interesting. Well, how about this one? We have another Solana treasury company, the first publicly listed firm in Europe running a Solana treasury, disclosed holdings of 2.7 million. So, guys, this is what we're seeing. We're seeing this next rotation starting. Okay, it was Ethereum. Now we're starting to see Solana get a lot of traction. And then I want to play this video too. He's talking about RWAs and how they're coming to Solana.
Tokenizing on Solana. RWAs, a lot of talk, Solana's all about meme coins. Solana's all about this, that. RWAs are coming on Solana in a big way, more than doubled already over the course of just this year, approaching 500 million, partially because of tokenized stocks. Shout out to the X stocks homies. You can now trade Tesla, Apple, and many other tokenized equities on chain. If you go to Jupiter, you can actually see a little screener with all of them. Shout out to R3, who's looking to bring 10 billion with a B in RWAs to Solana. And of course, a ton of great startups in the RWA space. In particular, shout out to the homies at Oro, MetaWealth, Agridex, because I know those guys personally, and I think they're all awesome. But really, the reason this is so interesting, the future of finance, I've said this many times, is not DeFi versus TradFi, right? It's DeFi plus TradFi. It's internet assets and real world assets together in a global unified market. That is the future of where we're going. And you're seeing that start to happen on Solana right now. That's a W in the chat.
Boom. Talking about 10 billion in RWAs coming to Solana, combining RWAs with traditional finance on chain. It's happening on Solana, guys. And they continue to talk about the upgrades they've had recently. We're watching the money flow over to Solana, and I think it's just such an obvious choice right now. That's why I have been buying up. So I've also been buying up these treasuries. Obviously, you guys know that. You look today, obviously we had up actually dropped quite a bit. It's the largest Solana treasury. It has rebounded nicely today, up 12%. And I plan to continue buying up these dips, and I think we will likely see more dips and volatility throughout the rest of this year. But I think overall we'll see an upward trend. Okay, not to say we might not see some bigger drops along the way, but I'll be buying up those dips. Same with this one, DFDV up 11%. Nice bounce today. So anyone that bought that dip yesterday, congratulations. You're already up 10%. Man, and they're going to keep accumulating. Now, there's been a lot of talk, though, about how long can these treasury companies last, because they've been selling at a premium, basically looking at this MNAV. And that is essentially the ratio of their total market valuation divided by their underlying assets. And most of them have been trading at a premium. But this is something we're starting to see, which is a little bit concerning. And this is the CEO of a Bitcoin treasury company that's not trading at a premium, unfortunately. They're actually trading well below their underlying asset values. And this is their CEO's statement that he put out.
Believer in Bitcoin, something really interesting is happening. Bitcoin spot is roughly 115,000. Our shares of Embry Digital are being offered at effectively $89,000 per BTC. As of this morning, the 19th of August, you can buy into a portfolio holding 4,056 Bitcoin, representing a more than 20% discount to the value of those holdings. Some impatient hedge funds are exiting, driving down the share price, creating an opportunity to effectively buy BTC at a significant discount to spot price. So what are we doing? We are buying back as many shares as we're permitted to under our corporate repurchase program. Let me walk you through it. We own 4,056 BTC, $9.30 of BTC value per share. The stock is trading at roughly $7.25, or a 24% discount to the Bitcoin portfolio value. Please do your own analysis based on your time of watching this video. but I believe you will come to the same conclusion. We will continue to buy our stock to the extent it remains at a discount to BTC.
And, you know, Raul Paul came out and he actually talked about this too. You have the digital asset treasuries. This is when you see this DAT, that's what we're talking about, these treasury companies, right? So I think the entire DAT thing is going to come down to who has a bear market strategy to mitigate severe discount to MNAV and who doesn't, because they've been trading at a premium. Now we're starting to see, just like that guy said, that their valuation is actually discounted to their underlying assets. Those that don't will have forced liquidations. Those that have the right bear market strategy that allow for future compounding of NAV will survive and then thrive. So I think this is right. And I'm not the only one. There's a lot of people that are talking about this now, that the treasury companies could end up pushing us in the next bear. In particular, if they're using a lot of leverage, because if they're forced to start liquidating their assets, we could see a compounding impact of that on the markets. We could see things really crash. So for me, I believe, I don't think this treasury thing's been played out, in my opinion. I think that we still have, you look at where the rotations are going, I think there's still a play here, but I think eventually the music will stop. It's just a question of when is that going to happen? So for me, I'm like, all right, I'm positioning. I think Solana is the next rotation, the next big one we're starting to see. I want to front run it. I want to get in these treasuries, but I will definitely be diligent as we see the market get overheated potentially and taking out some profits, man. I don't want to be sitting there when everything comes down and the music stops. Not to say it's definitely going to happen, but I could absolutely see it happening. But when you look at the price of Solana, someone said, what's your price prediction? That's a good question. I think we see new all-time highs. We see new all-time highs for sure. End of year, man. I don't know. I'll have to think about that. Higher. Not to say it won't drop before we move up again. We could in August and September maybe see a drop. You know, I've been talking about September being a potential big sell-off as we lead up to the FOMC. But I do believe if we do, we'll see a nice bounce back, but higher. And I thought this was interesting, by the way. So look at the tops here for Solana. End of March in 2024, we saw it peak. We saw another peak right around Thanksgiving into December of 2024, last year after the Trump pump. And my favorite, you guys know, the Fear and Greed Index, this one in particular, is this has been such a good indicator. Like beginning of March, second week of March, we saw it top out over 90 up here. We saw the same thing happen around Thanksgiving. You know, just like clockwork, 2 weeks later, Solana peaked out after both of those hitting extreme greed. We saw the same thing with DePIN projects. And that's why I think that we're going to see this rotation of capital once all these catalysts come together that we've been discussing. And I think we're going to see that the projects, particularly DePIN project and Solana, will do quite well when that happens. So I'm obviously keeping a very close eye on this Fear and Greed Index. And for people that are saying that we've already peaked out, I don't believe that. I mean, you look at the CoinGlass, the bull market peak indicators, we haven't had a single one of them. There's 30 of them. Not a single one has hit. So not to say we won't see some volatility along the way, but guys, I personally don't think that we've seen the top yet. I don't buy it. But talking about DePIN, because I think DePIN will have its time. A couple articles that came out. One came out yesterday. This is from Forbes Digital Assets. So this woman put out this article. She talked about the passive income with DePIN. She talked about Silencio. She talked about XYO. Also talked about Havelo. There's Havelo there. A few others as well. But basically talked about, hey, this is a big movement that's coming. She talks about how we're going to change the way people think about income. Instead of tech giants owning all infrastructure and taking profits, it lets you turn everyday assets into money makers, things that we've been talking about a lot. So pretty cool to see DePIN. They were on NASDAQ, obviously, a couple weeks ago with some of our favorites, Helium. We saw HiveMapper, Render on there. Now we're seeing That Forbes is highlighting it. We also saw this article come out. It says, is DePIN dead? Expert reveals why 2025 will be the breakout year. This came out within the last week. It says that DePIN's growth slows, but the CEO insists the sector will break through in 2025. Talks about how it's one of the most talked about sectors in crypto and experienced substantial growth in 2024. However, and this is something we've been talking about, we felt the pain here, but crypto metas like meme coins, NFTs, and others regain traction. DePIN has struggled to maintain its momentum. They talk about Helium here and what they're doing. They also talk about how the initial surge of interest provided crucial attention and capital to validate the technical viability of DePIN projects. But in this apparent slowdown, focus has shifted from speculative token growth to providing long-term utility. What do we talk about all the time, guys? Utility, utility, utility. Filtering out weaker projects ultimately strengthens this sector by highlighting what approaches deliver real value. He does go on to say that he believes 2025 will be the year, even though there's, DePIN is boring, and that's been kind of the narrative recently. He says that is how fundamental or how transformative infrastructure operates. Okay, so we're getting to the point of maturation. We're getting to the point where fundamentals are shining through. Guys, it is happening. We're starting to see some of the major media pick it up. DePIN search terms, obviously, we saw a huge rise, a little bit of pullback. I think that's because of the market conditions more than anything. We've had a pullback the last week, but still all-time highs. Seeing the same thing with decentralized physical infrastructure network searches. So all of that bodes well. And anytime we've seen these types of peaks, 2 to 3 weeks later, we see big surges in the underlying assets and DePIN. So will it happen again? I think it's just a matter of time. We saw Helium. We talked about this yesterday. They had their announcement. They're going to increase to burning 100% of revenue from Helium Mobile. We're starting to see that impact. That is freaking crazy. That is freaking crazy. And let's look at the Helium price here. Now, I got to jump, guys. I got a space to hop on, the DABA space. Helium sitting at $2.66. I did yesterday on the dip after the show. If y'all remember yesterday, I talked about how I think I'm going to rotate some assets into H&T after that announcement. I think it has some room to run. I do believe so. I'm going to continue to DCA if we see any more drops like that, because Helium's fundamentals are freaking incredibly strong right now. The revenue is crazy. The token burns are increasing. I don't know, man. I just feel like very, very bullish about Helium right now. I think there's just so many positive catalysts. The price just hasn't caught up yet, in my opinion. Let's look at DABA real quick, and then I got to hop over to that space, guys. This is the big thing I'm looking at. Well, aside from the fact that they've now sold 18,000 hotspots, obviously they had 5,000 sold in that enterprise deal they announced recently. But guys, the installed hotspots continues to increase, and that is very, very good news. Approaching 7,000 now. So this number has been ticking up as they add LCOs to installs. We're going to continue to see those numbers pop up. That means more revenue. That means more data over the network. Those are the fundamentals we want. We expect that the mainnet, the token launch, will happen within the next less than 60 days, I think. So that's going to be very exciting to see how that goes. They've obviously put a lot of thought and effort into having a successful launch. Could that be in the midst of the Solana spot ETFs getting approved, of the market structure bill getting approved, and then we see this type of a token launch at the same time? Wow. Talk about potential fireworks, guys. And we got Flywheel Systems over there feeling helium-ish, huh? I'm feeling pretty helium-ish too, man. I know. We go way back. Flywheel and I go way back. We are talked a lot about helium in the last market cycle. Talked a lot about it. All right, guys, I got to hop. I'm actually a few minutes late here, but check out DePIN. It should be going on right now. Is it? It does not seem to be. All right. Well, anyway, check it out, guys. If it hasn't started yet, it should be starting any minute here. And I will see you all over there. Peace. Have a fantastic day. Appreciate each and every one of you. See you guys.